Hello and welcome to SwitzerTV Investing. Every Monday night on our YouTube channel, we go looking for the best stock ideas so you can make money out of the stock market. And rumour has it that impeachment talk and global as well as US economic slowdown indicators are increasing the Trump team's interest in good trade deal news. And as trade deal news improves, the outlook for the Chinese company shares out there and their prices should also improve. On tonight's show, we will talk to Dr. Matthew McDougall of the Australia-China Daigao Association. I'll also ask my experts Julia Lee, Michael McCarthy, Charlie Aitken and Paul Rickard for the best China stock plays. So without any further ado, let's go to my first interview. Julia Lee from Berman Invest and Michael McCarthy from CC Markets. Thanks for coming to the program.
Pleasure, Peter.
All right, now I asked you guys to hone in on China. I'm actually interviewing the Dr. Matthew McDougall from the Australia-China Daigao, hope I pronounced it right, Association. Can you believe it? There's 100,000 Daigaos in Australia. Staggering. Okay, so I want you guys to tell us how we should invest to cash in on China's future. Julia?
Sure. Well, we know that having a look at some of those China-exposed companies, that the Daigao growth has been moderating, and instead we've been seeing e-commerce really surging. So I thought I'd focus in on an e-commerce company over in China called JD.com. Now, it is traded through the NASDAQ as well, if you want to trade it through the US. But this essentially is an electronic platform which deals in electronics, consumer goods, and is starting to get into things like grocery as well as luxury goods. And
just diversify.
It is moving into a lot of different segments. And what excites me about this company is in the second quarter of the year, we did see, we saw earnings growing at about 23%. Now for the third quarter, they're predicting growth of 20 to 24%. And the third quarter of the year is usually the weakest quarter for Chinese companies like this because it's in the fourth quarter where you start to see the Singles Day and start to see a real uptick from that type of promotional activity. So I'd expect this fourth quarter to be quite strong there as well. Tencent owned 20% of this company. And look, it's been doing pretty well in the year to date, but I still think that it has good legs given that we are seeing strong revenue growth coming through and the profit results have been better than expected.
So you like
in the year
both,
to date.
or you like JD only?
I like both, but I like JD better than Tencent. I think it has a faster growth profile.
Okay. Mike?
Well, look, I really like that thematic. We've been talking for a long time about the shift in China's economy away from an industrial economy towards a consumer-driven economy, so I like that theme. But I also like to keep it simple, Peter, and the reality is...
Why? You're not a simple bloke, you're very complex.
Well, I tend to overcomplicate, Peter. So, using Occam's razor, I'm going to cut through, and I point out a number of iron ore producers are in a very attractive position. Now, I've got to leave Fortescue off this list, not because I dislike it, but simply because it's still trading near $9.
Okay.
And I can't buy in there. For those who want to take a safer approach, Rio has pulled back significantly from its highs above $100 a share. But for mine, it's in the smaller end of the iron ore market where I suspect there'll be good opportunities. And I note today Pilbara Minerals was one of the key performers, top in the 200, I think up around 5%. So looks like a few other people might be taking that simple approach as well.
Are you saying on the basis that China, after a trade deal, might do better? Or you link it to the Vale problems when it comes to the tailings dam? Why is iron ore back on your radar screen?
Vale is certainly one of the reasons, and I don't think that's going to go as well as everyone has hoped. But also, I'd point to the idea that just like Japan, there's a lot of cooperation across the economy in China. And when things are at loggerheads with international partners like Australia, like the US, a lot of China pulls together. And so steel production gets cut, imports get cut. Now this, I'm not arguing a conspiracy theory, this is a different way of looking at operating a business, and it's one of the realities on the ground in China.
Sounds like a communistic version of capitalism.
Hybrid, sure. But once, if there is a path cleared on trade, then that cooperation will turn around very, very sharply. And the fall in iron ore prices from above 800 yuan to around 600 means that it's well positioned.
I wonder if sometime down the track we'll be talking about a Trump-led economic recovery. If the trade war, like I know there's talk about impeachment making the White House more amenable to fixing up the trade war situation, but it would be amazing, say, in 9 months' time before a US election, we're talking about a Trump-led recovery. That'd be extraordinary. Julia.
I have another one. Now, Louis Vuitton, they say, is the brand of love in Asia. That's because LV, if you take out the vowels, is Louis Vuitton. And look, the beauty trend in Asia is a huge one, especially premium beauty in China. Just having a look at some of the growth rates in 2017, premium beauty grew by about 25%, and then in 2018 that accelerated and grew by about 28%. So it's a big category globally, but particularly in China, it's a huge category. Even in the US, having a look at some of the channels for beauty, that grew by, I think it was about 8% last year. But exposure to this, I'd prefer it through something like Louis Vuitton Moët Hennessy, LVMH. It trades in Europe, in Paris. And look, I think it has a strong growth profile there. And just to give you an example of how strong those beauty trends are at the moment, the superstar, rock star Rihanna, she released her beauty brand Fenty, first year of sales, $566 million US dollars, first year.
Yeah. Well, here's a guy who's long on beauty.
Your sarcasm was not appreciated.
Okay.
However, I do have one more,
okay.
and that's Tencent's holding. You mentioned it before.
Yeah.
It's actually listed in Hong Kong, so Australian investors can buy it directly. And it's fallen now partly due to concerns about what's happening in Hong Kong on the ground, but also because of the concerns about the trade war. It's fallen from about 400 Hong Kong dollars to be trading around 316 today. So that's a big pullback.
Yeah.
Now this is China's internet operator. It is directly leveraged to growth in the economy, and because it's part of the internet age, to that new growth. So I think that pullback in price means that that's an opportunity to get exposure to a growing China.
Okay, let's come back home. I said to you guys, your best stock of the week, and you got an interesting one.
I'm going to surprise. I know there's been a lot of focus on frothy stocks, so I thought I'd go back down to an unloved stock that's looking at a turnaround. Now, we've seen some great turnarounds in terms of the Aussie share market. Qantas has been one of them in the last decade, BlueScope still. I think it's Domino's turn. They have been investing in turning around their strategy, especially in Europe, where there's a new CEO. In France, in fact, they're planning to open a record number of stores in the current financial year. A TV campaign around Europe, depending on some milestones. Japan's going from strength to strength, and I think Australia is improving as well. So FY20, I think, is going to be a good year.
Have they created the low-fat pizza that actually tastes like a fat pizza?
All
Wouldn't that just change
pizza
everything?
is low-fat. What are you talking about, Pete?
How about the muscle-engendering pizza?
Oh,
that
you're
would
making
work.
me hungry.
I don't know.
Me too. All right, Macca, you got another local that we should...
Well, I've done okay out of active managers recently, Peter. As I've mentioned
Because Challenge was
before,
one of your calls a few weeks ago.
yeah, and we were talking about it between 660 and 680. It's now trading 770 today, so that's worked well for me. Platinum Asset Management has also risen, not as strongly, from about 380 to trade at 420. Today it pulled back to 411, but even so, I'm liking that theme and the leverage that those active managers that are listed give me to that theme. And so I'm looking at one that's reporting first quarter sales on Wednesday. This is Janus Henderson, formerly associated with the AMP, now a standalone. It's diversified across the world, it's got operations everywhere, and it's diversified across asset classes.
Yep.
Now, I believe markets are subject to fashions, just like a lot of other fields of human endeavour, and at the moment, that active management style is out of fashion. I like to buy before they come into fashion and get the whole of the rise. So I'm looking at Janus Henderson before it reports its first quarter
So
results.
you're basically saying the infatuation with ETFs eventually will change when it's noted that some active managers really outperform.
Absolutely.
And I know with our financial planning clients, we've been putting people into Magellan because active management wise, fantastic. But even a company like WCM, which is listed, it's actually outperformed Magellan. Only just, but putting both together, you've got two very good active managers, which I think gives you the alpha in your portfolio.
Straw hats in winter, Peter.
Oh, he's such an old-fashioned fashion guy, isn't he?
Yes.
Julia
I'll
Lee.
give your time to you.
Julia Lee, Bear and Invest. Michael McCarthy from CNC Markets. Thanks, guys.
Thanks.
Thank you.
In the modern setting, we've heard about something unusual called daigous, people who go out and buy lots of infant formula, put them in suitcases and go back to China. Well, these are, as I say, very unusual days, and it's an unusual trend within Australia, but it's become a growing trend. And so we're talking to Dr. Matthew McDougall of the Australia Chinese Daigou Association. Thanks for joining us.
My pleasure, sir.
A lot of people have heard about daigous, and I didn't know there was an Australia Chinese Daigou Association. Why don't you explain to people what a daigou is and why there is an association here?
Well, look, daigou technically means buying on behalf of. You know, that's the translation. And I guess in 2008, when melamine was introduced into infant formula and there's a big uproar about it, the Chinese became very concerned, overly concerned about food safety in China. And so they looked for ways to get access to healthy, quality products. And so they sought advice from people they know and trust, usually loved ones. A lot of those people were studying in Australia. So they'd reach out to people here, they'd say, can you source me some high quality Australian product? And that became the informal daigou trade that we know it is today. So over the course of 8 to 10 years, it's now become industrialised. And it all comes around by this fear and anxiety over food quality, food safety.
And I guess historically, if you're a little old lady in an apartment in Shanghai and you find it hard to get out, there would be actually shoppers who would have been buying on people's behalf for centuries.
Yeah, absolutely. Those little old ladies tend to live in extended families in China, so those little old ladies tend to have kids and grandkids typically, but they have a high degree of interest in that grandkid. So those little emperors, so they call them, need to have the best stuff because it's an investment for the future. So they would influence, say, don't go into Shanghai, talk to cousin Wang down in Melbourne or Sydney, and cousin Wang would send it up to them.
Okay. How many daigous do we have in Australia?
Look, it's hard to know. Estimates put it at about 80 to 100,000.
It's unbelievable, isn't it?
Yeah, well, the bigger thing is it's almost $1 billion in cross-border trade, which is, from this informal affiliate type sales network, it's a very powerful channel.
Okay, now a lot of us heard about bus loads of people going outside pharmacies and going with cases and loading up with Bellamy stuff and A2 stuff or whatever. How serious was that for a while?
Look, 2016 is when we saw the peak of that. I think there was a little bit of craziness, and it wasn't about all brands. So a lot of the people sort of concern themselves that infant formula is in crisis. Well, it's not really. It's about 1 or 2 brands in that category. A2 and Aptamil is where the high degree of contention is because there's problems getting it on shelf. But most products are freely available. But since 2016, manufacturers have been more sympathetic to the Chinese daigou. In fact, they'd actually create events and buying programs specifically for them, but then infant formula was an anomaly outside of that.
But then China cracked down on the cross-border trade that wasn't going through official channels.
Look, China's tweaked the registrations, I guess tweaked is a good way to call it, for years. And I guess the major tweaking was January 1st this year, whereas the new cross-border regulations changed the way that daigou went about business, and I think to the betterment of the whole industry. Chinese government were concerned with 2 things. One was the taxation and income not collected at the border. Secondly, the types of products that were resold back in China, there was no recourse. So if that product that was resold back in China caused someone sickness or illness, who did you go after? So part of the regulation was to say if you're going to resell in China, you must be registered as a business, and therefore there is recourse over any issues with quality about that product. It's not a bad thing.
Do you think that it's possible that Chinese administration are actually afraid of too much money being spent overseas when they really should be developing their own local businesses to cash in that market?
Look, I think that's fair to say. The Chinese government is spending a considerable sum of resource in trying to give the local community, the Chinese local community, confidence in their local manufactured products. So I think that's a fair assessment. The Chinese consumer, however, sees the Western products in some sort of glory. And so there's always going to be a desire by the Chinese community to buy from overseas markets, predominantly Australia.
Yeah.
Although the Chinese government want to put a curtail on that. Absolutely.
Yeah. I think it was there was an Australian bed maker that was selling beds for like $80,000 in China because it was Western.
Yeah.
Basically. It was a good quality bed, but we would never pay that kind of price.
Sure, but Brand Australia still maintains a high degree of interest by most Chinese consumers.
Yeah.
A lot of people study here, travel here, and we're seen as a very safe, high food quality destination.
I've also been told, and this is purely speculation, but it did come from a Chinese colleague of mine who actually is involved in WeChat, that sometimes you'll get movements on WeChat discrediting foreign products on the basis that, well, they want people to buy the local version. Is that,
look,
you've probably heard that same
look,
story.
it's true, but I've seen it in action. You tend to see it around Japanese products if there's some, geopolitical issues around. So we saw that around 2014, 2015. We saw it again with the French in early 2012, 2013.
Yeah.
So there is some geopolitical,
Payback.
I guess, alignment between those types of campaigns online to what we're seeing. And I guess, you might say there's some US tension right now because there's some negative types of sentiment. But, fortunately, I don't see too many incidents of Australian products being caught up in that type of activity.
The trade war and its impact on Daigao and particularly the Australian version of it.
Sure. Look, we're not sort of seeing a slowdown in products being sold by this channel to China at all. What we are seeing is some cross-border delay, so in customs clearance. You might say that it could be a coincidence, but it is slightly slower getting across border.
Yeah.
But in terms of, other Chinese consumers turning against Brand Australia and Australian brands, we don't see that at all. In fact, we're seeing quite the opposite.
Okay, now I'm going to make this a hypothetical question because I'm just going to say, assume that unfortunately some loved one of yours, very elderly, had a great life, so happened to pass away and leave you $1 million.
Sure.
And she recommended in the will that you invest the money overseas. Would you be confident to invest in the Chinese market going forward?
Well, I have. So I own businesses in China. I've got teams in Beijing and Shanghai.
Yeah.
I continue to maintain a confidence with the Chinese consumer.
Yeah.
All of the indicators suggest that even though it's a slowing down, it's still not a bad percentage of growth.
Yeah.
As a shareholder and investor, I would look to de-risk some of my investment in that market.
Yeah.
But I'm very bullish about what President Xi's intending to do. I think the One Road, One Belt initiative creates opportunity. I'll be interested to see how that sort of plays out in the next year or two. But if you're an Australian manufacturer looking to export overseas, where would you think? Well, China is obviously in the top one or two, and that doesn't change.
Now, what is one or two of your businesses in China?
One is a cross-border business, so we move large quantities of product, agro product generally, into mainland China, and another one is a brand consultancy. So we work with Western companies to help them position and brand in China itself.
Is that why you're a part of the Daigao Association? Because you are actually moving products from Australia to China, and you're effectively supplying on behalf of Chinese customers.
Yeah, absolutely. So a few years ago, a lot of the manufacturers that we work with were coming to us trying to understand, well, what's this Daigao thing about? And so we had both the manufacturers sort of having a curiosity and an interest. A number of our suppliers were doing a very poor job at creating relationships with that community. And on the other hand, we had the Daigao participants being demonised by the media through mostly infant formula. And so we thought if we can create an association, help that Daigao community understand what sort of code of conduct would make sense so that they could be seen in a better way, conduct business in a better way, and at the same time create an education process for the manufacturers. That bridging would be to the betterment of the Australian economy, and that was the initial thing we set out to do.
Okay, one final question. On the Trump trade war, and his unusual ways of dealing with the people who's negotiating with, which he's been doing ever since he was an entrepreneur.
Sure.
Do you think the Chinese are are working out how to play Trump, and that they're not willing to undermine their own economic progress just to succumb or to deal with Trump in his unusual ways?
Well, I think there's two things there. So I think the Chinese have definitely worked out Trump in how he works, and I think he's unpredictable, and I think of all those things. That they're smart negotiators. The key difference is the Chinese work on different time frames. So the Americans, and as much as the Australians do, we work on very political cycles.
Yeah.
The Chinese take a long game.
Yeah.
I think that they'll wait it out if they have to, and I don't necessarily see that as a weakness. So I think, yes, they understand he's predictable, or he's unpredictable, but on the other hand, he's predictable because he's got some behaviours now that are consistently coming back around. But I don't think that's a problem. They know 2020 is another line in the sand, and whatever happens at that point, they'll either wait it out or go hard and negotiate. I don't see them compromising a great deal.
Yes, because if the Chinese stock market happens to fall 50%, the president of China won't get kicked out of the next election.
Yeah, President Xi, he's basically there for life now. So
I guess his life could be shortened by someone who's unhappy about the stock market loss, but that's a pretty long bow.
Absolutely.
Dr. Matthew McDougall, thanks for joining us.
My pleasure, sir.
So we're going to talk about China today, guys. Charlie, let's kick off with you first of all. Now, I noticed in the AFR, apparently, there's China's gone cool on Australia, and so I want to know, how do we play China? Do we believe even trade deal phase 1 will help Chinese stocks go up?
Well, we play it a bit differently. We look for revenues that are not necessarily based in China, but are actually Chinese revenues. So,
Give me a classic example.
Well, I still think our biggest holding with exposure to Chinese consumers is Louis Vuitton Moet Hennessy, the world's leader in luxury goods. A stock that covers pretty much every element of luxury you could want to buy, with 32% of its sales coming from Chinese nationals, and all the growth driven by Chinese nationals. Now, the most interesting thing of the last month for us has been, despite the riots in Hong Kong and the public disorder in Hong Kong, people were worried about Louis Vuitton sales, Gucci sales, Moncler sales. They have all been as solid as a rock. And even on Friday, Gucci, the parent company Kering, was up 9% on confirming sales. So these luxury sales remain very, very, very resilient. So I like doing it that way at the moment.
And we heard today that they've put a $14 billion offer in for Tiffany's. That's not a bad play.
Yeah, well, remember, Louis Vuitton's 194 billion euro market cap stock. It owns brands like Louis Vuitton, Dior, Bulgari, Moet, Hennessy, Veuve Clicquot. It goes on and on. But Tiffany, if you think about it, $14 billion US earnings. It's jewellery and watches. Jewellery and watches are only 7% of Louis Vuitton's profit at the moment, including Bulgari, whereas leather goods and fashion are 57%. It actually makes sense. Bernard Arnault has done wonderful acquisitions over time. It is a true luxury brand, and I think that rumour about Louis Vuitton bidding for Tiffany will prove to be right, and it may prove to be a good acquisition at the right price. So it makes logical sense. The other thing is, they control all of their own sales. Remember, Louis Vuitton only sells its product through its own stores, same as Tiffany's. No third parties, no websites. They control everything.
Okay, before I go to Paul, now when you were a young man, you actually used to play Chinese companies direct. If you were the first person to talk to me about Tencent and all these other companies, why have you changed? Why have you said?
I've still got some Tencent. No, I think they're okay, but you've got to learn your lesson. It's a risk you don't necessarily have to take.
Right.
You can get plenty of Chinese exposure without investing in China, and that's a lesson I learned the year before. We got hurt a bit up there.
Yeah.
So we've thought about that and thought, where do you buy the actual revenue and exposure without being domiciled in China, without having Chinese accounting risk, and without having the huge volatility that comes with this sort of risk on, risk off trade relationship. So we've thought about that and just recalibrated where we own things.
Okay, Paul. You're not usually
first
a
of all,
Chinese kind of guy.
First of all, that's right, Peter. First of all, I have very little first-hand experience shopping at Louis Vuitton shops. So
That is a lie.
Yeah, and that's because he's a tightwad. He's got the money to do it. Poor old Fiona's been mistreated by you, scab.
No one believes that.
So I
you asked for that.
I did, but I had to get that disclosure out there. Look, I a bit like Charlie, I think you can play it indirectly. I haven't been a huge fan of the China trade per se with Australian stocks, mainly because I just thought just the unknown regulatory risk, and we've seen it.
Me too.
And I guess also is what tends to happen is things get overhyped. So people talk about how big the Chinese market is, how many people are, the rise of the middle class, and before you know it, the stock price is sort of doubled or trebled on the basis of very little. So I was always a bit wary on the hype. The one stock that I do think is starting to look like value is A2 Milk. It's come off a long way. Some would argue it might have a bit further to go, Peter. I think it's actually got a pretty solid business. The management team's shown a fair degree of commitment. It had a business in the UK. It's got out of that. It's just focusing on China and Australasia, China and the US, and perhaps in some ways sees the US as being, if anything, maybe a bigger market one day than China. But it does seem like if you look at their, they gave a very interesting presentation a couple of weeks back where they went through their marketing strategy in China. It's on the website. It looks like they really have thought about what they're trying to do. So I'm not saying it's ready to turn around, but I do think there's value, and that's one way you can look at it.
The only thing I'll say about A2 Milk is that I don't disagree with all that, but just remember this is a company with no hard assets. It doesn't produce the milk, it's a marketing company, and it does a lot of third-party marketing too. So they absolutely have to get marketing right. I mean, there's no shortage of milk or milk powder in the world right now. It's a huge commodity.
And there's a couple other competitors coming into that field, but that actually may be good for the category. So I take your point. They do have good supply arrangements in place to make sure they've got access to the powder and the processing. So it is a marketing company, but in some ways, I'm not sure that's a bad thing, knowing how to market, how to sell, how to distribute. In a very niche market and with a niche product, that can actually be a real strength. So they're not trying to do too much, Peter. So I think it's one way you can access to that sort of growing market. One of the other facts I read in my research, Peter, is that they're now in something like about 11 or 12,000 mother and baby stores. Now, I guess they're the old sort of
babies in China or
in China, but to tell you how big that market is about 140,000. So it's about a 10% penetration, but it's a huge market. It shows you what's capable of.
Yeah, but and I want you to talk to this point, and I'm sure you've thought about it as well, Charlie. The regulatory challenge in China. What if China says, "Well, we're sick and tired of these foreign companies making money. We'll make it ourselves." They could just basically change the rules, couldn't they?
Well, yes, but you can also see that the Chinese just bid for Bellamy's to get a foothold into the milk powder from this end of the world. So that regulatory change can work both ways. It can actually lead to takeovers of foreign-owned companies that actually produce a high quality milk powder, etc., etc.
We're seeing that in a number of industries where they've tried to invest in Australia, Peter. So, look, there is regulatory risk, and that's why I think you've got to be a little bit careful. I think you need a premium. To invest in China. I think the Hong Kong situation demonstrates that as well. So care is needed, but you've got to buy stuff that's got value, and I think has got a legitimate and a growing business. And it's got to be on a different margin to what you might pay for an Australian company competing locally as opposed to one competing in China.
It is worth keeping in mind. Like, we're not getting on brilliantly with Beijing at the moment in terms of. And there is some risk that they could do some little slap over the wrist things to certain industries. So I think that is not being alarmist.
Yeah.
And
I've heard WeChat has been used to discredit Blackmores, and it was like a concerted program to undermine the company.
Yeah, look, I don't think it applies to iron ore or liquefied natural gas or coal, but it just could be a little bit of increased risk of some of this. But a lot of these shares have fallen anyway.
And that's why, Peter, I'm not out there trying to buy at the top. Whether it's low enough down is another question. But I think I'm wary of the hype, wary of the regulatory risk, wary that and we saw it, the example, Peter, I think came with Tencent and the direction they weren't allowed to cover a couple of NBA basketball games. Look, they're really, if the Chinese authorities want to make life tough for an Australian company, they certainly can. So that's why you need a premium. Or they want to make it tough for anything that else is competing in their market. So I think maybe playing it indirectly through suggestions like Charlie has is perhaps one way to do it.
One last thing, and it's a question without notice. I've been reading a number of people saying that as impeachment talk increases in the US, the White House team are working a lot harder to get some kind of trade deal because they don't really need the economy and the stock market tanking when there's impeachment talk around. Charlie, got a view on that?
Yeah, I think that's arguably right. But I mean, Trump's very aware of the share market. This is one of his positive advertising points. And as we know, as we sit here today, Peter, the S&P 500 is 3 points below an all-time high, despite impeachment, Brexit, whatever, inverted yield curves, this supposedly bad reporting season in America, which is actually turning out quite well. You know, everything you can think of has been negative, climbing the wall of worry. Here we are. Because guess what's most important, Pete? You don't fight the Fed. Fed's been cutting rates, and guess what? The US share market's pretty much back at all-time highs. So I think the impeachment thing has, as we discussed here, I think a couple of weeks ago, it's directed Trump to focus attention elsewhere. The economy, the share market, rate cut, you know. So look, I still think a lot of that's a furphy, but it has certainly been reverse correlated to the share market. It's doing well under that.
Yeah, I think that's the point. It is 3 points off an all-time high, record high. So look, the US market goes from strength to strength, and I don't get worried about the impeachment thing, Pete. I think if anything, it's as Charlie said, he's focusing on other issues now, and he needs to. So he wants to be re-elected in 2020, then maybe change the rules after that. So
Look, I mean, he actually has done quite. I mean, he has bullied the Fed into cutting rates.
Right.
It's quite amazing, and here we are.
Yeah. I guess some people would say they might not have needed to cut rates if there was no trade war and there was no challenge to global growth. But that's an argument.
Yeah, but
for
think
another
about it.
day.
He controls that trade war narrative. So they get them to cut rates, then he eases the trade war. Then he's got low rates and an eased trade war.
Yeah, happy days. Charlie Aiken Investment Management, and Paul Rickard, the Switzer Report. Thanks very much, guys.